Hello, my name is Paul Ndiho and I'm a licensed real estate agent. I've been getting a lot of calls, people asking me about the different types of mortgage, the mortgage options that are out there, especially for first-time home buyers who don't understand how mortgages work. They always have these questions about the different mortgages. For example, they ask me about conventional loans, they ask me about FHA loans, they asked me about the VA loans, then USDA loans. And sometimes I don't have the right answers to give them, because when it comes to mortgages, it all depends on your financial situation. So let's say there are people who don't even require a mortgage, they just pay cash. So if you're one of those people with deep pockets, you really don't need a mortgage to purchase your first home. You can just look at a property that you want, and if you have the money to pay for it, you pay cash. But for those people who require some kind of funding, there are different ways to go about it. For example, you can go to a bank, a credit union, or a private mortgage lender, and their rates in most cases vary depending on what it is you're trying to get, or sometimes depending on your credit. Your credit score plays a significant role in determining what you will qualify for when you're trying to secure funding. Let's start with conventional mortgages. These are most common, typically require a credit score of at least 620 and have a debt to income ratio, or DTI, as high as 50%. First-time home buyers only have to put down 3%, where the most impending potential downfall is private mortgage insurance, or PMI. Fixed rate mortgages, what are these? The rates do not change throughout the duration of the loan. Your monthly payments are fixed, so you can budget very well. Adjustable rate mortgages, or ARMs. These are not fixed, as they reflect the market's interest rates situation. They typically start with a fixed rate for a few years before becoming adjustable. Initially, you get lower interest rates and a more affordable premium payments monthly. Although once the fixed period is over, the payments can rise significantly. They are less predictable over longer terms. Let's talk about government-backed loans. These are FHA, VA, and USDA loans. They have some qualification guidelines, yet they can offer lower interest rates and down payments. FHA loans, minimum credit score is as low as 580. All you need is a 3.5 down payment. USDA loans, no down payment required. Income requirement must be in rural areas. So if you're trying to buy inner cities, forget about it. You have to be in rural areas, especially like farmlands. VA loans, no down payment required. More competitive rates are for qualified veterans. You can only access this if you're a veteran. Annual percentage rate that is lower at closing costs, and down payments must meet specific criteria. High cost in terms of insurance premiums. Jumbo loans, these are more significant amounts than the standard limits for typically more expensive properties. You take out bigger loans for expensive houses. Rates are comparable to conforming loans, requires a high credit score and a low DTI. A larger down payment is also required. It all starts by you venturing out there, looking at the different options and figuring out what works for you, because what works for me might not work for you. We all have different financial situations. If you like this content, please feel free to subscribe on this channel. We'll keep posting this kind of content to help you as you try to purchase your home.